All right. What's up, guys? We are back here. Yeah, okay, I'm making sure everything's set up looking good. We're going to be looking for some stocks. We're going to do some research. Got a pen. Got a notebook. I like using notebooks to write down lists of stocks. The notebook so far has a small list of a bunch that I crossed out and a few that I kept. But yeah, we got to set up the scanners on Thinkorswim. If you don't know how to do that, this will be a great opportunity for you to learn from me doing it. There's also a video in the playlist, the day trading lesson playlist of how to set up Thinkorswim, but that's for day trading. This is going to be for searching for stocks for when the market finally hits that scary bottom that everybody's worried about. So I'm going to go by industry. I think I want to go by... I want to look at tech stocks first. And of course, everybody who is a retail trader on YouTube and Instagram and all that, they all are going to have the same exact videos. It's going to be buy Tesla, Facebook, Apple, Microsoft. All of them are going to tell you to do that, so that's why I'm doing so much research, because when I do a video, we're going to look for some diamonds in the rough that nobody else is going to be talking about on social media. I want to find those ones that the institutional investors and really advanced, professional stock guys on Wall Street are looking at right now, drooling over, waiting for the prices to come down lower. Because, Apple, Microsoft, Tesla, all those big household name stocks, of course, those will rebound, and they will be a safe, good investment when we do hit that market bottom. But like I said, there's more out there than just those stocks. So that's the ones I'm looking for, the ones that nobody else is going to be looking for. So, like I said, I'm going to go by energy. And let's go technology, hardware, software. Let's just go all information technology and see what that finds us. So I'm going to leave the minimum at 50 cents, and we're going to put the max. Let's put the max at 50. Because I'm also not looking for those stocks that are like Tesla was $900 and now it's down to 500 or whatever it's at. I haven't looked today, but 500 is still a lot for one share, but it is Tesla. I understand that, but a lot of retail traders can't afford a bunch of shares of Tesla, or I'm sorry, retail traders meaning most retail traders. They can't afford a whole big portfolio full of those stocks, but they might have 500, 1,000 to invest. So I'm going to be looking for those lower price stocks as well. And of course, I'm not going to be looking for any garbage penny stocks. I would never recommend getting into a penny stock at the market bottom, but we'll get there. We're definitely not messing with those. So yeah, $50 for the max. Oh, that's volume. I thought I had the price. Oh, okay, yeah, I did. I already did that. Okay, so now I'm on volume. I don't think I need volume, because everything's either going to have a lot of volume from people selling off, or it's going to have no volume because people aren't touching it. So that's not really a good factor to search for what we're looking for. I don't care about shares at this point. Just bear with me, because it's been a while since I've set this scanner up for something different. So it's going to take me a minute here to figure out what I want to put in here. But that's the beauty of Thinkorswim. You have so many options. Let's see, let's take that one off. Okay. Let's add a fundamental. And let's see. Do revenue. I think, yeah. I've got text messages. Forgive me. My phone has been blowing up crazy since all this started. So I'm always answering messages or on phone calls. And it's always crazy. Alright. Okay. Let's go with 5 year, because 3 year is only a little bit of information. So we definitely want, I'm going to turn my phone ringer off, so it's not making all kinds of noise. Okay, should be good now. We definitely want positive revenue. So actually, instead of by revenue, because I'm most curious about dividend stocks, I think we'll do dividend payout per share. And then we'll do a minimum dividend. We'll say a minimum of 5 cents and a dividend payout. Yeah, that's the max is 99. I don't know of any stocks that pay out a $99 dividend per share, but that would be interesting. So first, let's just scan with this. And let's see what we got. Okay, I might have to adjust some of this. Let's see, high, low, volume. EPS, that's good. Actually, let's go by, see if I can put yield in here. Yeah, dividend payout per share. Alright, okay, we want that. Take out net change. Okay, there we go. Now, let's look and see what we got. All these have went up. Alliance. Now I'm just going to look through these, see if anything stands out to me as far as the names of some of these companies. Because I day trade a lot, so I see a lot, and I see a lot of penny stocks a lot. There's several penny stocks that tend to pop up more often than not, just because they're pretty easy to get pumped. Okay, so we actually want to switch this to 2000 so I can see. There we go. And Xerox is on there. Xerox down in 1968. So I'm going to use this watch list to put put ticker symbols on them. That's what I'm going to do, is bring them over from this list, the ones I like, to over here to a watch list. So then afterwards, we can go look at them on a chart and get more information. And if you're very analytical, I mean, you can load this up right here, Thinkorswim, and customize, and you can add all kinds of different things. But I like to look at them at a simpler side first, and then look at them on the chart and see what they look like on a chart. Because if one of the criteria I'm looking for, if a stock has been going down the past 5 years, then it's probably not a good stock anyway. So this market crash probably made it go down even more. But that's not really getting a good deal on a stock that was already going down. You don't really know how much that's going to rebound. But if it's a stock where it's going up over the past few years and following with the bull run that's been going on, then that stock, even though it's crashing right now, you know, it can get back up to those levels because it was a strong stock. And that's just a simple way to look at it. So if I just by doing that, just by looking at that, I can tell whether or not I even want to deal with a stock or not. And I can see that from just looking at the chart. And it tells me a lot where I don't have to look at all these different stats. So yeah, Xerox we're going to add on here because I'm a little familiar with Xerox. I think they pay a pretty decent dividend. See, does all these not have dividends? Because the little green money symbol is the dividend symbol. Whether they're green or red today doesn't matter because the market came up some, but I'm still going to look. Let's see. No, I can't look at it that way. Actually, let me change something. Let's see. Oh yeah, okay, I see what I did. Okay, there we go. All right, so we got Xerox on there. Let's go by price. So what I'm going to do to start out with is just drag the ones that have the dividend symbol because they clearly have a dividend. There's Cisco. That's not got a dividend. Western Union. There I got Xerox, Benchmark, Marvel. Whoops. I'm on my account, so this is a real account I'm on. I don't want to be buying stocks that I didn't mean to buy. That would be something. Alright, so let's go and narrow this list down because I don't want this getting overloaded. And then we can see what's going on. So let's move this over and let's change this to a 5-year chart. So they've been paying a pretty consistent dividend, this Seagate. It was kind of on an uptrend. Let's see if I can figure out when this came out. I'll say, okay, so it looks like it looks like it IPO'd in April 18. But they've paid a consistent dividend though the whole entire time over the past 2 years. Let's see what's their newest press release. That's another thing. I can also look at press release to get an idea about the company, what they're doing. So they have an award-winning product line. And actually, interesting enough, now that I'm thinking about it, this is on a trend line in this past 2 years. And the market crash has actually brought it down to this trend line. The lowest it's been is 30, 60. So, I mean, this stock's actually not a bad stock. It's not much of a discount right now. I mean, $20, well, about $19. I mean, that's a pretty decent discount, but not my favorite. There's a lot better deals, I think. I like the dividend, and I like that it's still on this uptrend, even with where the market's at. I don't know. I think we might leave that on the list. Let's see. And this is Oracle. And they've paid a dividend. Let me go back to the 5. There we go. They've consistently paid a dividend. And they've also consistently been on an uptrend that they just broke. And it was down to 40. So, I mean, between these two, you have a better dividend on this one. I don't like that. On 5 year, this has been on a downtrend. Bell, let's see. Leading supply series, fanless. Okay. See, I don't like that it's been on this downtrend even before the. It's been on a downtrend since 2018. Yeah. So that one I don't even. That's all I gotta see. I want nothing to do with that company. If they're not growing in a bull market, they're doing something wrong. And this one looks like maybe it's been inconsistent with dividends. And it's been on a downtrend too. Yeah, that's pretty low dividend also, so. Okay. They've increased their dividend the whole entire time. It is on a downtrend that started in 2019 at the end of the year. Acquired some storage. People are cutting price targets on it, so something, there must be something to it. So I don't think I want to put it on here. It was kind of coming back up before the crash, though. So when did that crash start? January, but it's no, it's the downtrend. I'm gonna take it off too. Like I said, I'm not gonna mess with them if they've been on a downtrend. Now this stock has went sideways for 5 years, and they've consistently paid a dividend. This is Sabre. Well, I mean, consistently, it's pretty much went sideways the past 5 years. And of course, it crashed with the market. I mean, it doesn't look like you're going to get much growth out of this stock. Their dividend increased in little increments, but it is pretty cheap. I mean, when we get to the market bottom, this could be down to $2 or $3, maybe even $1. And when it rebounds, the dividend's somewhere in the range of 10 to 15 cents. So, I mean, that's pretty cheap considering what the dividend payout is. It's an interesting one. I'd like to do some more research on that one for sure. Western Union had a nice little pop. Looks like end of the year last year, and then sold off pretty much right when all this started. But it was on a pretty good tear last year. Before that, it was just going sideways. And they've paid out pretty consistently, it looks like. This is probably a quarterly. Yeah, this is a quarterly dividend. So they pay about 80 cents a year. Yeah, a little less than 80 cents a year, really. That's still, I mean, that's still pretty cheap. Even if it rebounds and holds in this $19, $20 area. But if you got in here, if it drops down because it doesn't look like it's dropped that much during this market crash, because it went on this nice run. So I don't think this will drop down to that $2 or $3 range, but I think it could probably drop down to maybe 15, and that'd be pretty decent. I mean, 15 for an 80 cent yield and dividend stock, and it's Western Union, so you know they're probably not going anywhere. They'll figure out one way or another to be one of the leading money sending options. So yeah, I think I'm gonna leave Western Union on there. I just like that consistent dividend. They've constantly paid it. They did go sideways for a while, but then they actually had some growth somewhere. I'm sure you could see what it is if you did more research. But that's one I'm going to keep on the list and dive into later. If any guys have any questions or anything while I'm doing this, just go ahead and ask them in the chat, and I can take a moment to explain anything. I'm just basically doing my process when I start looking. What's up, Usama? Just trying to find some stocks. See, this is Astromed Inc. Let's see, it looks like they've paid. Looks like they're maybe, is that quarterly? Yeah, they pay quarterly too. So this is actually dramatically dropped from 27 down to $9. So that type of drop, and we've not, the SPY is still got a ways to fall. If this 240 area doesn't hold up, I'm expecting a 200 as the bottom. But if 200 doesn't hold as bottom, then 200-day moving average is like 186. And if those don't hold, then it's just crazy, and it's really dropped a lot. So, what was I just looking at? I think it was this one. Was it this one? Yeah, Astromed. Okay. So, yeah, as much as this has dropped, and they have paid out a consistent quarterly dividend of about 28 cents. They haven't raised it, but it's been the same. And normally the stock rides around like 15, and right now today's low is $8, so I could easily see this dropping down to that dollar range if we break the 240 area on the SPY. Maybe $3 range. I don't know. It could still drop quite a bit, and it's already dropped pretty good. So it's one I'm going to keep. Let's see, when did it start crashing up here? June of last year. Hold on a second. Let me look over at these press releases. Let's see, when did this start dropping? It started dropping June of 19, so 7/19. See, they were added to the Russell 3000. Launches new advanced tabletop digital color label printer. Let's see what happened. Okay, they missed earnings by a little bit. Lower fiscal revenue. And, okay. So they basically had some bad earnings. Let's see what they just had earnings again, it looks like. Okay, they had a fourth quarter loss. So they've been having some issues, and they've said that they're closely monitoring the viral outbreak for potential impacts on customer demand and supply chain. That means they're worried. That means they're worried that they might not stay in business, so maybe this may not make it through. It's definitely an interesting one because of how cheap it could get, but at the same time, there's a possibility that they could go bankrupt if they don't make it through this virus and recession, so I don't know. It's kind of risky. I have to do more research to really make a solid decision on that one, but I think we can find better ones. See, Western Union. See, these are the ones I'm keeping so far. Yeah, okay. DXC Technology, they've been on a downtrend for a while. Oof, yeah, no. Yeah, no, I don't want to do it. No. Let's see, ST Microelectrics. So you can see right away this is definitely on a downtrend. This, or not a downtrend, an uptrend. This was on a uptrend before the crash started. So that's good. Let's see. They were paying more of a dividend back here. Let's see, it's a quarterly dividend. Then they didn't have a dividend right here. And then the stock started going up, and they've had a 6-cent dividend, so it's like 24 cents a year. Outlook looks stable. I don't know if it looks stable, but well positioned to grow ahead of market capitalization on its portfolio. So that's interesting. It does have these moving averages right below the price still, so it's going to have a, I mean, it's probably not going to drop too hard even if the market drops. Maybe down to $10. I could see that. Interesting. Wonder what they're working on. France base, whatever that is. Audio amplifier. Okay. I'm going to leave it on just because I want to find out more about it. Because it is kind of interesting. And then it's microelectronics. The thing about tech stocks is even if the market crashes right now and it just keeps dropping, you know, when it does rebound, tech stocks have been on uptrends, and they will continually be on uptrends, ones that are strong businesses, because technology is only going to further advance. So, you know, if you buy oil stocks, eventually, you know, we're either going to run out of oil or they're going to do a whole worldwide thing where they switch all cars and things that need oil to electric or whatever they're going to do eventually for the environment. You know, when Tesla takes over the world, those oil stocks are going to become nothing. And, you know, that could happen, you know, within the next 10 years, next 20 years, maybe even next 30 years. You don't know. But it could just happen. And then you lose all your investment on them oil stocks all of a sudden because, you know, something like that happens. Whereas technology, like I said, technology is going to keep growing and technology stocks will keep going up. Of course, after the market rebounds. Anything I say right now about stocks, just remember, we're not done yet, or at least I don't think so. So I'm not talking about buying any of these stocks right now. You don't want to do that. You want to wait till we get down to that bottom. So, but yeah, let's go to the next stock. I'm curious about that one, but okay, well that's interesting. Say a press release said, where'd it go? Intel, AMD, and Marvel screen the best in this macro stress test for the impact. Oh, that's just somebody saying something. It's one of those guys you see on the whatever those shows are on that one channel. I don't know. Oh, anyway, let's look at this. So this has been on an uptrend. Dividends consistently been $6. So what I say? No, not $6. 6 cents. Sorry. First dual 400 gigabyte. Yeah, that's interesting. Hold on, just a sec. There we go. Sorry, didn't realize my mic was off. But yeah, what I was saying is they beat their earning estimates in January this year. So I'm just trying to figure out what they sell, and it looks like they have something to do with LED lights. So, I'm gonna keep it on and do some more research about it, even though it's only paid a dividend since last June. Or no, I'm sorry. That's June 18th, it looks like. Yeah, okay, so 2 years ago. I was right the first time. Let's see, it's a 48 cent annual dividend. It's quarterly, but just trying to add it up. Yeah, I'm going to do some more research. If this company was growing before all this, this might be a good company to invest in, depending on how they were growing and what they're selling. So yeah, we're going to leave that on the list. Western Digital. If you want a solid company, when we get to the bottom, Western Digital is your stock. Pretty sure it's a $2 dividend a year, 50 cents quarterly. Yeah, it was 50 cents quarterly. Western Digital is definitely going to continue, their technology advancements on their products. They're pretty solid products. I've used Western Digital hard drives. So I think this is one I don't think you can go wrong with. Right now in 5 years, it just reached its low of $31. So I definitely like this one. This one is probably actually might make my list for the actual videos. Because if Western Digital gets down to $15, $20, that's a pretty good steal. Let's see. Yeah, $2 a share dividend a year. Yeah, definitely could be a steal with a solid company. Let's see. I want to see what a 10-year looks like. This I actually might switch to a 10-year so I can see better. There we go. Yes, I'm gonna leave it on a 10-year instead. But yeah. It has kind of been on a downtrend since 2015, but this 200-day moving average has held up as support, and it looked like it was starting to come back up again before this crash. So yeah, still, even though it's on a downtrend, it's Western Digital. If it was at 114 before, what probably what, let's see, where did they start? They started their dividend back here. It's a 25-cent dividend. Yeah, so right in here they brought it up to a 50-cent dividend. I don't know, they might have had some issues or something, but even during these drops, they still paid that 50-cent dividend quarterly. So yeah, definitely, I think that's a good buy if it gets down to those areas. And here's Xerox. So Xerox has been on an uptrend. Did have a dip there. But still, sometimes stocks dip below the trend lines, and it came back up. I think Xerox is wanting to buy HP, or I think they were trying to buy HP and said they were still interested in buying HP. So if they ever do that, that would be pretty big. They've been paying a 25-cent dividend since, looks like, 2017. That's a pretty decent jump from a 7-cent dividend up to a 25-cent dividend. The lowest it's been is 1607. Yeah, you can see right there. HP takeover due to the coronavirus. Oh, let's see. They postponed presentations and the meeting to take over. Ah, okay. So yeah, they're still trying. They're still trying to get HP. So I would say it's definitely one to watch. I'll leave it on the list too. Let's see. T Tech started dropping about December. It has been on an uptrend. It was all the way up at 50. 10 years ago, it was down at 13, so it has had some decent growth. The dividends, they started in 2015. And it looks like their dividends have constantly went up and actually went up pretty quickly. It looks like the more money they start making, the more they start shelling out to dividends. So that's a good thing. Yeah, I think this is one we'll keep on here too, because that is a good thing. You know, they might cut dividends during the crash and possible recession and all that. Some companies will have to do that to survive. But once they get through, and start coming back up, they'll start their dividends back once we get out of this craziness. So I like that stock. I'll do more research on it. And this is Cisco. Cisco Systems, okay. I just want to make sure this was that one or the food company, because there's a food delivery company too. Yeah, this is tech, so it's the system one. They've been paying a dividend consistently. Where's it up to? 35 cents. Let's see. This quarterly? It's gotta be quarterly. Yeah. Yeah, so it's about $1.40 annually. It's not bad. The stock has had some good growth since really about 2012. What's up, Daniel B? So I think I'll keep Cisco on this list too. It's got a decent enough dividend, and it's been on a nice uptrend for a while. Over 5 years, almost 10 years, really. So yeah, I think that'll be a good one. If the market gets down to that bottom, maybe we could see this around $20 to $15-$20 area, maybe even 10. I wanted to swing GMPX. I thought about it yesterday, and I was like, this would be a good swing, and then I completely ignored it, and then of course today it ripped like crazy all the way up to $4 almost. But it is what it is. There's other stocks. See, here we go. But yeah, GMPX was definitely a good one to get back into. See, where was I at? I was at Cisco, I think. Yeah, I was at Cisco. So we got IDCC. 710. Yeah, so there's a quarterly dividend. And they were paying about, 35 cents. 35 cents. 30 cents. It was on a bit of a downtrend the past 3 years, it looks like already. Enter digital. I just want to look. Let's see. So it looks like they didn't beat their estimates. They were a little off on their revenue estimates. Okay, they got awarded ETSI Specialist Task Force contract on multi-access edge computing. So I'm actually going to keep... actually come up some today. Yeah, I think I'll keep this one on the list too. It's one I'd like to do a little more research on. I know this is my first step. I like to go through and look at dividends and chart patterns to see which way they've been heading and stuff like that, especially right before this recession. But yeah, once I get done with this part and I have a nice big list, I will then go through and look at 10K forms and news and all that good stuff. Their EPS, revenues, the cash they have on hand. I'll be looking at all that stuff before I make my final list. This is just the first steps. I'm cutting out ones that I instantly don't like. So we will get there. It won't be this stream. I plan on maybe starting to do a few of these streams over the next couple of weeks. Just because I'm going to be researching and I'm going to be coming out with these videos for this. So I might as well live stream the research so you guys can see what I'm doing. So, but yeah, I will get there eventually. And I'm not the most statistically sound at looking at EPSs and all that stuff. I mean, I know what most of it is. I mean, some stuff that really doesn't matter. Some people will say it does, but it really doesn't. But I mean, to me, if the company is big red line in the sky, what does that mean? What do you mean by that? I don't know what you mean. But yeah, anyway. Let's go and look. Let's see, where do we stop at? The last one was IDCC. Let me check something real quick just to make sure that this scans. Okay. Big red line on my chart? Oh, yeah, that 200-day moving average? What are you talking about right here? It's both charts got big red lines on it. That's pretty much everything right now besides, some of the coronavirus stocks. Let's see, where's the SPY at real quick? Let me look at the SPY again. Oh yeah, the SPY is actually getting back down to those support levels. So actually, the SPY may drop tomorrow. Woo! TVIX is all the way up to 650. I like seeing that. Yes, sir. All right. Anyway, back to the stocks for later. Oops, I didn't mean to do that. This is one way you can come look for some stocks. If you want to look at it from this way, they tell you some information. You could probably fix that. Okay. I'd love to see TVIX back in these areas. That would be insane, but that'd probably be that'd probably be a pretty bad stock market crash. And plus, TVIX has reverse stock splits and stuff to try to keep it balanced out. That happens. No, I know nothing. I know nothing special happened. HTBX though, it did come out with a decent press release. It says they're one of the 41 companies working with the World Health Organization for a vaccine. So HTBX might get some attention off that, but we'll see. So anyway, back where we're at, we gotta look for IDCC and then add stocks from there. It's probably gonna mess up my list. So actually, before I do that, because I'll be searching around all these stocks, let me write these ones down that are on here. Give me just a minute, guys. Nobody reacts for strong buy. What are you talking about for HTBX? Same thing with, that's what you're talking about. Same thing with AYTU. AYTU came out with that press release today, which I thought was a pretty good press release, and it would have got a lot more attention than running back up to where it was an hour before. Okay, so I got all those. So now I'm going to delete these off of here. I got them wrote down. And then we're going to add more to this watch list here. And then once I eventually go through all these, what is going on here? I like Western Digital though. What do you think about Western Digital, Daniel? I think it's a pretty good one. See, I don't remember looking at Link or Refill. Okay, there's Sabre. Did I miss those? I don't know. I'm going to put Link on here. Because Link has a very low float, interestingly enough. And it's paying a dividend. Man, it's $4. I'm curious to what that dividend is on that cheap of a stock. Here's another one. It's pretty cheap. BKTI. This other one's BKYI. You don't think if AYTU starts pumping out tests that people aren't going to invest in them? I didn't ask you about AYTU. I asked you about Western Digital. What's wrong with you, man? Come on. Listen, if I lose, I lose. It'll be a lesson learned. Some of these, I think I looked at DXC. Some of these moved on me. or something, or I hit something. Comtech. I don't remember that one. STM. Looked at Benchmark. Looked at Xerox. Looked at that one. I don't think I looked at Cypress. No, maybe I did. NetApp, I looked at that. Okay. So let's look at these ones real quick. Belfuse. By, say, oh, you're saying if AYTU gets approval, they don't need approval, Daniel. Did you not see the press release? The FDA is stepping aside. States can choose anybody's test they want. That's why AYTU came out with that press release today, saying that they're speeding up their process and getting their test here now. They've got 100,000 on the way, and then they're gonna have more made and shipped. So they don't need FDA approval. If Colorado says, if AYTU is like, hey, we got the test, Colorado can say, all right, let's set up testing sites. And now AYTU is supplying all of Colorado. They don't need FDA approval. That's out the window now. That's only a matter of time when they say they're set up with the tests with the testing sites and then in doctors' hands, because they've got commercial rights. And then, of course, other states might have already contacted them. That's why they set up that email. So, yeah, they don't need FDA approval. They've got it. And if it catches on, they have the fastest test. I'm sure other states will definitely be calling them. So, yeah, Belfuse, don't like. It's been on a downtrend for a couple of years. 6 cents. Well, actually, let's see. It's down to $8.25, and it pays about 6. So it pays about 24 cents annually. 6 cents quarterly, but 24 cents annually. It's down to $8.25. Actually, because of the price and because really kind of before the crash, I mean, it was on a downtrend here, but really this is all sideways consolidation. So it doesn't look like the company's really grown too much, but they're staying consistent. Or they're just staying consistent. Same dividend from back here. So that could be an interesting one. Just because of the price, it's all the way down to $7.21 today. Excuse me. So that's an interesting one. So we have two Belfuses. Belfuse A and Belfuse B. And they pay a 7-cent dividend, it looks like. Quarterly. Yep, and they've been paying that same dividend forever. Is this a separate? Yeah, this is a separate stock because the other one's 6 cents, the other one's 7 cents. Strange. I'll have to do some more research on this company. A lot of bigger companies will have 2 or 3 stocks. Coca-Cola has a lot. But yeah, this one was down to 7.27. That one was down to 7.21. So I'm going to keep them both on there, and I'll find out about what all that's about later. So Link just paid a dividend out here. Yesterday. They just paid a 15-cent dividend yesterday. Okay. It's interesting. Yeah, I'm going to do some research on this stock to why they're paying a dividend out all of a sudden. But I don't know. Oh, there's a dividend here. What is this? Comtech. Let's see. Comtech's been paying, looks like, a 10-cent quarterly dividend. Oh, actually, back here it's paying a 30-cent dividend. Looks like it cut its dividend. And then it's been on a nice uptrend for a little while. But they didn't raise their dividend. But that's a good drop right there. What was that? Like 10 days, 29 down to 16. This is another one I'd have to look more into to see why they cut their dividend. I'm gonna leave it on, and just in case. BKTI. Oh, this was the cheap one. So they've been paying a 2-cent dividend. Oh, the Bell A and Bell B. Give me a second. I'm curious in the stock because right now it's $1.60. See this? Let's see, January 2nd. What's going on here? Okay, June. Okay. Yeah, so this is a quarterly dividend. They missed one right here. Let's see, 9. They paid a little late. That's what it was. So it's a quarterly dividend. About 8 cents. But the stock is only $1.63. So, I mean, interesting. BK Technologies. What's up, One Life? What? Why would any of these stocks I'm looking at right now be preferred? They all pay dividends. They show that they pay dividends. Are you saying they would show? Are you saying that they would show that they've been paying out dividends, but if it's preferred, who would they be paying it to? What would be the point of this information on Thinkorswim? And I'll be honest with you, I don't know how to check on Thinkorswim if a stock is a preferred share or a whatever, preferred or a common. So if you want to tell me where to find that at, I'll find it. But shouldn't it say somewhere up here? I've never really looked at that on the Thinkorswim app. I have to look at the 10K. Well, I don't want to do all that right now. I'm gonna be looking at that stuff later. So, like I said, this is the first step. Like I said, the first step I like to do is scan for a couple simple things like dividends, and then look at chart patterns and how much the dividends are, how much they're paying out, how consistently they've paid them out, if the dividends are going up, if the stock's going up. I like to do all this first, and then I'll look into all the other stuff. So I'm not doing the 10K right now. But I thought maybe you were saying there was a way just to look, like press a button somewhere and it would show you. And there probably is, but I don't know it. So yeah, BKTI. That's the one I was looking at. It's only paid out this dividend for 2 years, looks like. Go to Google. Yeah, but I don't want to do that right now. That's what I'm saying. I know I can go Google it and find the 10K. I don't want to do that right now, though. That's what I'm saying. I want to stay in this process. We'll get to that process later. You're jumping too far ahead of me. I have this, like, there's a million ways to find stocks, but this is the way that I like to do it. Like, I don't think there's one right way or wrong way, to be honest, because there's so many different ways, but it's just my way. And I like to stay focused on doing the same thing until I get a big list, and then I'll go look at those numbers and I'll narrow it down to a smaller list. I'm not sure what you're saying there about it. It's more complicating. I don't know. Okay, where are we at though? BKTI. This is one I want to find out some more stuff about. Definitely, because if they continue to pay this little dividend, I mean, the market keeps dropping. You know, you might could get the stock for $1, maybe 75 cents. And then when the market rebounds, it's paying out a 25-cent dividend. That's pretty good. I don't know what you're saying, Daniel. What are you saying? What do you mean it's more complicating as you think from the chart? I don't understand what you typed. Don't get mad. Alright, anyway, BKTI. Yeah, I'm going to do some research on it. And see where we're at here. What is this? RF Industries. Looks like they've been paying a dividend since 2014. You know Daniel, he's always being sassy. Daniel's a sassy boy. Okay, so 2 cents seems to be the dividend here. Oh, they're paying a 7-cent dividend back here. 777. Where did they stop paying the 7-cent one at? They stopped paying it in 2016. Because it went down. I wonder why it went down so much through here. But right now it's like an 8-cent dividend annually. The stock's about 381. Yeah, Daniel, send the link to the Facebook group. If you guys haven't, if there's anybody in here who hasn't joined the Facebook group yet, all you gotta do is go to Facebook and groups and search Framework Fortune Day Trading. No, I haven't drunk any beer. I'm thinking about maybe having a little glass of some Buffalo Trail whiskey, though. I'm pretty sure Buffalo Trail is not Uh, is it Buffalo Trail or Buffalo Chase? I don't know. My wife gets these. Uh, what do you call them? Limited sale whiskeys and different alcohols like that because of where she works. So she gets them, and they only put out a certain amount of alcohol a year. I think it's Buffalo Trail. I think that's what it's called. But yeah, it's pretty good whiskey. So I'm thinking about having a glass of that tonight. But I'm going to keep this one on the list too just because of how cheap it is, and it has been paying a dividend out since 2014. Pretty decent dividend for the price of the stock. It was all the way up to $12. Looks like right at the end of 2018. Been on a downtrend since, but I mean this was a pretty good run it went on. So I mean I could see this getting back down to $2, maybe even $1. But I'd have to look at everything else though. All right, so we got those off here. So let's add these to this list. So this is a pretty long list of different ones. So I think what I'm going to do now is I have this other list that I've already went through a bunch of them and marked out. And we'll take a look at, I want to take a look at some of these again. These are not ones that you guys have seen yet. I was doing this the other night. So HDFC Bank, they're paying out a dividend of 50 cents annually, it looks like. And it has constantly went up as the stock went up. I definitely think some bank stocks will be good. Daniel, you pointed out Citi earlier. I like Citi. Yeah, so trend line's about right there. I'm just trying to see if it cracked that trend line yet. And it doesn't look like it really has yet. So Citi, or not Citi, HDFC holding up. And they just started paying that out in 2017. So I don't know about that one yet. I do like the uptrend. I do like the dividend, but it hasn't paid dividends for a long time. But it is a bank also, so you know. See some of these other ones. And they're Bank of America. That's another one I've got on this list. They pay out a quarterly. I think it's quarterly. 12.5. Yeah. And it was up to 18 cents. But I mean, it's Bank of America. It's a pretty big bank. And it was all the way up to 35 and just dropped down to 20 today. Actually, let's see. Yesterday it dropped all the way down to 1958. So I mean, if this keeps coming down and it just cracked this here, so now it doesn't really have much support. $20 is pretty much the only support that it has. Until about 18, it could drop from 18 to probably 15, then 12. So yeah, I could see maybe Bank of America getting down in this $10 to $15 range. And if it definitely got cheaper than $10, I think that would be a pretty good steal on Bank of America. See, 2012, it was $5. Actually, if you could get it cheaper than that, if you could get it for around $5, maybe a little less, because it could get all the way back down to here, actually. Yeah, the 10K. Oh, I didn't know that's what you. Yeah, that's what I was saying. The 10K. Yeah, it's the financial statement. It's like the 8K is when they talk about changing CEOs or investing in the company, all that stuff, and then 10K is the annual filing statement. But yeah, Bank of America, I think definitely has some potential if it gets, especially if it gets back down in these areas of this $5 area. I mean, I don't know how you, I don't know how anybody could argue that. What do you, Daniel? Listen, I'm not. I keep telling you this, and you keep on not understanding what I'm saying. This is only the first part of my research, but it is Bank of America. So I mean, how much more research do you need to do besides look at some of their numbers? You know, I highly doubt Bank of America is gonna just go out of business. They just committed 100 million in support for communities around the world. So, but no, I'm gonna dive further into this list and look at 10Ks and all that stuff. So calm down. I will get there eventually. Right now, like I said, I'm just looking at this stuff. But yeah, I like Bank of America. These are stocks with potential. There's still more research to be done. There's still more market crashing to be had to get lower prices, so it'll be okay. Let's see, PFG. This is a financial group. Been paying out a pretty consistent dividend. Pretty sure it pays $2 annually. That's broken up quarterly in 50-cent payments. And right now it's $28. So if this keeps coming down, if you get this for 28 or $20, and they're paying out a $2 dividend a year, that's pretty good. It's a good 10% yield. So that definitely will be staying on the list until I do more research. And then Budweiser. See, I think some of these. What's PBR? Is that Pabst Blue Ribbon? Or did we just? That ain't Pabst Blue Ribbon, is it? Oh, okay. I was gonna say I don't know if they got a stock or not, but I was looking at Budweiser. I thought that'd be funny. That'd be a funny coincidence. So what is PBR? What's the deal with PBR? Is this an oil stock? So here's my thing with oil stocks. Eventually, in the long term, if you're holding an oil stock in 10 to possibly 30 years, most cars, yeah, oh yeah, I'm sure to definitely get back up to the $15. It's definitely a good swing trade from the market bottom. But I wouldn't want to hold this for, 15, 20 years or any longer than that. Like my issue with oil stocks is eventually they're going to switch most cars to electric, or if not all cars. There's going to be some environmental mandate or something like that. And of course, I know that you still have tankers and ships and all that stuff, so that they're going to need oil. But you know, I mean, 10-year run, maybe even 20-year run. Yeah, I could see this being a good one to get. But uh, like I said, over a long period of time, technology is advancing fast. So, you know, we already have electric cars. It's only a matter of time when oil becomes, obsolete for the most part. There's going to be other ways to travel and stuff. So, But yeah, I do like it right now. See it come down even lower, maybe to $3 or 2.50. And then after the recession, I definitely could see it bouncing back up to this $15, $16 area. I definitely could see that. So it is a 6 month investment. Okay, yeah, 6 months to a year. I mean, maybe even 5 years. If they start climbing up, if it gets more demand for oil, maybe after this recession. It's a PBR, One Life, just PBR, like Pabst Blue Ribbon. But yeah, for a swing, for like a medium to long swing, yeah, I definitely like this. It's definitely going to get back up there, and especially after all the nonsense is over with, they are going to need a lot of fuel to get, even while this all is going on, they're going to need a lot of fuel to get people to, or not get people, but get medical supplies and food supplies and all that stuff. So they're going to have pretty good sales. Yeah, I think you can make $10 a share, but see, if you buy now, I think you're still buying in too early. I think you could get it in at 250. I think at 250 you'd be a lot better off. I mean, I guess the price range is, you've only got a price range of up to like 17, 18. So I mean, $2 more down. I don't know. I'd probably still wait though. But yeah, I could definitely, after all this, I could see them springing up and getting back to these prices pretty easily. So there's a good possible swing. I'm going to add it to my list, but I'm going to put it over on the side. But yeah, I'd like to do a little bit more digging on this company, but I like where your head's at for a swing. Especially if this drops down to like 250 or $2, you know. Yeah. Yeah, it's a pretty good swing, I think. Or it will be a good swing. But yeah, you could average down. You could. I mean, if you like averaging down, you definitely could. You could start a small starter position now and see how much further it drops and add a little bit more until we get to that bottom, and then load up at the bottom when it starts to show a reversal. And if you wanted to, I would probably wait a little bit longer because I think we're definitely going to drop. Let's see, where's the SPY at right now? And the SPY's in that 242 area. Alright, so yeah, back to Budweiser. And I was switching to Budweiser when you said, what's going on here? Heinz and Busch are drawing down their credit lines. Okay, well, that's not surprising. And they have been on a little bit of a downtrend. But, they've only paid this dividend for a little while. But here's what caught my eye about this. I think it's annual. Let's see, 5/7/19, 11/19. So it's actually not quarterly, but 19, 19, biannually. Yeah, that's how I kind of feel about it too, Daniel. Is I don't like I really don't like to average down on long-term investments, or at least like I wouldn't want to be averaging down right now because we don't know where. Like nobody knows for sure where the bottom of the SPY is. I'm pointing at this stock, but I'll go over the SPY for a second while I'm talking about this. So, oh yeah, there it is. Nope, not that one. But yeah, nobody knows how far the bottom could actually be on this. So this is what I'm looking at. This is the 10-year. And you can see so far we've crashed down this far. You know, the market's been on this bull run, and there's plenty of levels for it could drop to. So we're at the 240 level now. The next level I think is 200. So that's still quite a bit of a drop. So like if you average down like we were talking about, if you start a starter position now right here, and then the market drops all the way to the 200, you know, that's pretty far down. But if you like averaging down, like I have been averaging down on some swing plays, but swing plays I think are a little different. Normally I wouldn't average down too much. I would try to get out, but because of circumstances on these stocks, I think we gotta watch that. So where are we at? I was looking at GoDaddy. Just because GoDaddy was all the way up at $80, and the crash so far has brought it down to $40. So that's a 50% drop. And if the market keeps crashing, you know, you could get GoDaddy maybe for $15, $20. You know, it's been going sideways. Went kind of sideways for, it looks like, a little over a year maybe. Yeah, I kind of agree with you on life too. I still think we got a ways to go before the market starts rebounding. That's why I'm starting my research now, is cause if I start my research now and I get a plan together and I have a watch list to keep an eye on them, and then we start hitting lower levels on the SPY, then I'll be ready. I just don't want to be caught off guard for when the rebound does happen. What you worried about my Planet 13 shirt for, Daniel? Oh my goodness. Listen, even if Planet 13 goes out of business, which I don't think is going to happen, it was still a joyful experience visiting that place. It's a tourist experience, and if you're in the Las Vegas area after everything's done and we can travel again, I definitely recommend you check it out. I like the company outside of just stocks. I think it's a cool idea that they have, and that's why I'm a fan of them. So, if you think I'm stupid, it is what it is, but I like that company. They have a cool idea, and sometimes cool ideas can be the best investments. Like, here's the problem that I see a lot of times with every trader out there, whether long term or day trade or whatever. Everybody has a different point of view. I'm not taking it serious. I'm just saying that I think if there's any new traders in here watching this is a good little tidbit of knowledge. But every trader, especially long-term investors, they have different points of view. You know, some traders are extremely technical. All they look at is technicals. Some only look at fundamentals. Some look at technicals and fundamentals. Some investors, and one thing that I like to do, just my own personal preference, is I like to invest in ideas of companies. Imagine if you found Tesla, when it was super low, and all you heard was Elon Musk on YouTube or something talking about, that's the wrong one. Nope. There we go. Yeah, what if Tesla come out at $14 and you see Elon Musk up there, little young 10-year ago Elon Musk, and he's like, actually, I don't want to go back 20. But anyway, you seen him and he's like, I'm going to make electric cars and I'm going to fly to Mars and I'm going to do this. And you're like, dude, you're crazy. You're crazy, Elon Musk. And then some other guy's like, hey, I like those ideas. I know this company's not a big company yet, but it's cheap enough to where me, as a retail investor, I want to invest in the idea that one day you might actually possibly make electric cars and things like that. So the other guys who were looking at technicals of this new company, when it's a new company, they don't have much technicals. You don't have much history to go off of. And if they're looking at fundamentals, once again, you don't have much history to go off of. You can just look at what they started doing. So the guy who was like, oh, I like the idea of the company, he's the one who would get out on this, because the fundamental investors and the technical investors probably wouldn't touch this yet until it started showing strength and they had something to go off of. And the brave guy who took the risk, he got in back here at 14 or wherever it was at 20 years ago or whatever, and now he's sitting up here like, haha, and he's done made a killing. So that's something I don't think a lot of people think about, especially a lot of YouTube traders and gurus. It's always, you gotta just look at the technicals, or you gotta look at the fundamentals, or you gotta look at both technicals and fundamentals. Sometimes it's just an idea. So, yeah, you guys are messed up. Let's see. IRM. Let's take a look at Alpha Path's suggestion. What's up, Alpha? What's your name? Let's see. Alpha Path. Mouse dry. Hold on. I'm having a hard time with this, and I don't know why. Alpha Path. That's kind of hard to say. And maybe it's just for me, but I don't know. So let's see what we got here. Consistent 10-year dividend looks like, so I like that. See what they've been paying. Ooh, they got a nice dividend, 61. This is quarterly, it looks like. Yeah, this looks like a quarterly dividend of 61 cents. So annually, and it's consistently been going up for a while. It's down at 6 cents 10 years ago, and now it's 61 cents. So that's a pretty good dividend. And 60 cents quarterly, so that's $2.40 annually. That's a pretty good dividend. And this has been on an uptrend. Yeah. Yeah, this is a pretty good one. I'd like to do, let's see, Iron Mountain. What do they do? Wearable devices. I would like to do more information or do more research on this company, but I do like what I'm seeing as far as the uptrend and the dividend. It actually hasn't dropped too much yet. It's down to 25, but I mean, if this gets down to like $10, $15, their storage facility? What are they talking about? Wearable devices if they're a storage facility. That's probably why they haven't dropped that much. If that's all they are, is a storage facility. But yeah, I want to see. I definitely got to dive into this one and look a little closer. But I do like it. I am going to add it to my list. So thank you for that suggestion. That dividend it's a pretty nice dividend, honestly, for that price. But yeah, I mean, if you could get this down like 15, 15, maybe 10 if the market really crashed pretty hard. I think this would be a pretty good buy depending on what, the 10K Daniel B, depending on what all that says and tells me. So, yeah, good suggestion. Paper files. Interesting. That's cool. Is that all they store as paper files? Cause that would kind of make me nervous. I mean, I know companies have to have paper files, but everything is also filed digital nowadays. So my concern would be if that's all they're doing is if eventually they made it to where you didn't have, if you're a business, you don't have to have paper files. If you could just keep everything digital. Of course, they may be keeping paper files in case something crashes. I don't know. Like I said, I have to look more into that. I don't know a whole lot about that. I just know that you do have to have paper files for your business. And I'm sure Amazon has a ton of them. But I just don't. If that's something that would change, that would be the only thing that would concern me with them. If that's the only thing. That's what I'm saying. It's got to be more than paper. But it looks, the way it's been on the uptrend, I'm guessing they probably have some other things they do too. So, like I said, I'd have to dive into this one. But I do like what I'm seeing so far. But yeah, no, that's pretty much it for this list so far. We've got a decent list started for research purposes. And of course, I want to look further into these, but oh, I see what I did. Okay. Western Digital. Oh, I don't think I looked at. Oh, there's two I didn't look at. There's two I absolutely didn't look at. Actually, there's quite a few I didn't look at. So we're not going to finish up yet. I thought we were finished, but we're not. Because I was looking at GoDaddy, and I looked at Western Digital already. So I am. Okay. Okay. I don't know if I want to invest in them if they're storing cocaine, but you never know, man. It's hard to say. Okay, yeah. You got me. You got me. That's a good comment. You're a funny guy. You're a funny guy. I'm just gonna leave it alone now. All right. So anyway, let's finish this off, and then we'll end this stream as it is getting a little bit later, and I am about ready for a drink of that whiskey. So let's see where we at. GoDaddy Western Digital. So I am gonna be doing. Some different scans. That first scan was just well, Daniel B, my weakness is I'm not good at English either, so you're gonna have to come up with another excuse. I couldn't even say alpha. I'm purple. I don't know what y'all are talking about. If I turn purple, I don't know why, but that's crazy. But anyway, okay, so yeah. I definitely want to be looking at some of these travel stocks like Hyatt, Carnival Cruise. TVIX is up to 650 right now. Yeah, I was born here, but I was born in the South. In case you didn't know, which you did as you expressed the other day, in the South we speak a little bit different of an English language. So, and because I was raised with that accent, it has taken many years of me trying to cull it back and not have it so extreme so people could understand what I'm saying, especially since I moved to Wisconsin because when I moved up here, people really didn't know what I was talking about. So yeah, I can barely speak English too. Yeah, it's real. It's real, Daniel B. I know you're not from the U.S. originally, but people in the South, they talk it. Here, you want an example, Daniel B? Go look up Catfish Cooley. Catfish, Cooley. That is not an act. That is how that dude talks. Trust me, I've known many people in my life who talk like that. That is a totally different language. So, okay, where are we at? Yeah, back to the cruise ship stocks and all that. So, I've got Hyatt on my list just because of how massive Hyatt has dropped off since this all started. It was up to almost $100 at 95, and so far it's dropped down to 45. So that's nearly 50%. And it was paying a dividend. It started paying a dividend in 2018. Yeah, quarterly. So I could see this crashing some more, especially if we go on, especially when we go on lockdown. Or I'm sorry, I shouldn't say when. I don't really know. But I'm saying if we go on lockdown, these travel stocks are probably going to drop quite a bit more. But once everything is over, though, people have been cooped up. There's been this crazy virus going around. Once this is all over and the economy starts turning back good and people start traveling again, Hyatt and some of these other ones, the ones that can make it through a recession without anybody staying at their hotels, because basically that's what's going to happen. So we'll have to be looking at cash reserves on these stocks to see which ones can handle this recession and no business whatsoever. But the ones that can make it through could make for some great investments because they've dropped so hard. The potential rebound could be a very nice rebound. What do you mean? Are you saying it'll be a $10 stock? Is that what you're saying, One Life, or am I missing something? I'm guessing you mean that it's going to be down to $10. Yeah, yeah. That's what I'm saying. If everything keeps crashing and stuff, you get Hyatt for $10. The rebound on this could be crazy once everything's over and the economy starts coming back up and people start traveling again. So definitely gotta want to keep Hyatt on the list. I haven't done a scan yet, but I have a couple of them that I was looking at already. CCL, I think it's Carnival Cruise Lines. Yeah. So here's Carnival. This is another one, and Carnival has really, really. It was already on a downtrend, and that's why I say we'll have to look at cash reserves, see if companies have enough to survive. But in 2018 it was up to $72. Now it's $12. Yeah, yeah, for younger investors. I mean, even for even for us older guys, in 10 years, I think we'll be out of. We should be back on another bull run. Unless we really get, a lot of this depends. The timing of it all really depends on how bad things really get. And so that's where it's going to be hard to pinpoint. And then how bad they get is no, you and Daniel B aren't that old. You know, if this all clears up pretty quick, like within a year or two, the economy could jump back pretty quick if everybody survives through it. But no alpha path. I'm not like that's what I was talking about earlier. I think oil stocks can be some good rebound stocks for some swings, like 6 months to a year, something like that. They could be some good swings when they get lower. But as far as a long term investor in oil, I just don't think with the rate that technology is advancing that there will be uses for oil that much in the future. I think either everything switches to more of electric, like Tesla, or they find another power source that is more efficient. Because oil is not efficient, it's not clean. You know, it's just the easiest thing right now. But I think in the long run, you know, 20, 30 years from now, there may not be a use for oil. You know, like I was saying earlier in the stream, a company could, or not a company, but the World Health Organization or whoever, they could declare that all automobiles have to be electric now, you know. So if that happens, then oil stocks are going to take a big dip. But I think for short-term growth, yes, there will be some good buying opportunities that will jump as things get better. So, but no, I don't invest in oil long term. My favorite thing long term is technology. For like super long term, just because technology is always going to advance. So, technology stocks are always going to go up. Okay. I don't know what he's talking about. But yeah, Carnival Cruise Line, super low. Super low already, is most likely going to continue to drop. And if they can survive through all this, if they have the cash reserves or whatever, you know, if you could get this down at $1, they have paid a consistent dividend for a long time. So this could end up being a good buying opportunity when the market drops even lower. For the long term, these stocks, I mean, they could rebound, like I said, 2-3 years from now. Let's see, but that's Carnival Cruise. It's one I'm going to keep an eye on. I just want to see how low it's going to get and then see if it survives, basically. And if it survives, it could be a good one. Let's see, what was this one? This one was Coca-Cola European partners. This I thought was interesting. They're partnered with Coca-Cola. Coca-Cola's probably not going anywhere. They have everybody addicted. So anybody who drinks Coke, they know about the addiction. But they just started paying out an annual dividend the past 3 years. So I think it could have some potential. I mean, it dropped from way up here to this 55 mark to 32 so far, and it'll probably keep dropping. We also have to see how Europe is after all of this. Coke, sugar is a sure thing. Yeah, and the reason why I've got the European partners on here is just because Coke has several different types of shares, but I mean, it's a European partner, so the price is not as high as the actual Coca-Cola company share. I mean, that still probably will be a good buy once we're down at the bottom. But like I said, for these videos I'm going to be doing, I want to pick some stocks that are a little bit different than the mainstream ones like Coca-Cola. Yeah, I know Europe is having some issues. That's what I was saying. You want to wait and see how Europe is towards the end of all this before you buy a European partner like this. But it's one I'm going to look more into and check out. I think that's the one that's the one I'm at. CC. TS. Come on, Thinkorswim. TSQ. What was this one? Oh, this is Town Square Media. I don't know what's really going on with this stock. I've just got it on the list for now because I need to do more research on it, but they did start paying a dividend a few years ago. And let's see, I think it was annually. Or no, maybe it's quarterly. Yeah, it's quarterly. Yeah. So they were paying one quarterly. But they dropped pretty hard so far. From $10 down to $4. Actually down to $3.50. And so if this keeps on dropping, depending on how it looks, this might be another one of those cheap dividend stocks. It's some type of media company. So like I said, I gotta do more research on it, figure out what I think about it. And then Best Buy. Best Buy, we were talking about retail stocks the other day. A lot of retail stocks are, especially like clothing places and stuff like that, Macy's, JCPenney's. I don't know how much those companies are going to last through this recession, or how many of those companies are going to last through this recession. A lot of them were already in bad shape anyway because of Amazon. But what I was saying the other day was Best Buy is one of the few companies that is a retail company that has competed with Amazon and actually done pretty well. And they pay a dividend, which is nice. And one of the things I like to do when I'm investing is I like to invest in things that I like. And I like to go to Best Buy. Some days I'll just go there and look around at new technology that's come out because a lot of that stuff is really cool. So I like Best Buy. I don't think they're going anywhere. If I can get some cheap shares of Best Buy, I would do it just on the principle that I'll just like that company. Sometimes you just want to invest in companies because you like them. There's nothing wrong with that. But I mean, Best Buy's been pretty strong, so I don't see them going anywhere anyway. But like I said, Best Buy is cool. I like the company, so. And I think that's pretty much it so far. Let me just make sure. Yeah, that's it so far. So pretty big list. And like I said, I'm going to narrow this list down. But I'm actually going to keep adding to this list. And probably taking things away too as we go. But yeah, I like what we've got so far. So yeah. Costco has cheaper electronics. I mean, they might, but how good are those electronics? And then Best Buy, they have warranties that you can buy with them where they'll take care of your expensive TVs and stuff like that. But yeah. I don't know what Daniel B means by that comment. If you're talking about me being short on money, I don't know what you're talking about. I got a $1,000 check coming from the government. It's going straight into my trade account. But no. Yeah, that's pretty much it for this list tonight. This is as much as I'm going to do because the stream's been going for 2 hours now, so it's time to call it a night. There's plenty of time to research. I don't think we're to the bottom yet. I'd be really surprised if we were at the bottom. The SPY has been holding up 240, but 240 is most likely going to crash soon, so I think we got a ways down to go, and then we have to recover and everything else. So it could be a year, could be 5 years. I know it's nothing. It was a joke, Daniel B. Come on, man. As much as you say jokes, and then when I say a joke, you like correct me. Stop correcting my jokes. But yeah, I don't think we're done. Anyway, I think the SPY is going to keep crashing. Yeah, right. But see, here's what you got to realize, Daniel. I'm doing this research and this video not only for me to get in some of these stocks, but I'm also doing it because I have a YouTube channel. So uh, a lot of people who are going to be looking at YouTube, they don't new investors don't have 100,000 to invest. So when I give them ideas, I want to give them ideas that are good ideas, and telling them to take their $1,000 and go buy one share of Google because Google's down to 1,000 here in another month. I mean, like, so that's why I'm doing this though. That's the other reason. I'm trying to have a list for people to look at that is outside of the box of the normal Tesla, Facebook, Microsoft, Apple, Google. So yes, inherently this list is for people. All right, man. Are you drunk? You must be drunk right now. How many drinks have you had, Daniel? I'm talking crazy. But yeah, most new investors are not going to be shelling hundreds of $1,000s into stocks, especially if we go into a recession. A lot of new traders are only going to have $500 or $1,000, maybe $2,000 to invest. So that's why I'm looking at these other stocks, these lower price stocks, with dividends and stuff like that. And then of course, some new traders, they will, if some of them might be like 18 or 19. If they buy Carnival at the bottom when we get there, for $1 a share, and they buy $1,000 worth of Carnival at $1. In 5-10 years when Carnival jumps back up, they might make 12,000, 15 grand off of that 1,000 that they invested. So that's the thing. Right, that's what I'm saying. There's not there. See, back in the day, there was not a lot of information on YouTube and Google and stuff. It was more in books. But now there's too much information. So it's really hard for new traders to come in to cipher all these different strategies, especially with all the wannabe fake gurus and stuff out there. That's one thing about me. I've never claimed to be a guru or an expert. I'm constantly learning as well. But I'm not new to the markets. I've been in them for a little while. But, there's just too much information now. So you kind of have to sift through it. And any information I put on my YouTube channel, I want to be valuable. I want people to actually be able to learn from it and profit from it. I'm not just going to put videos out to grab views and tell people to buy Apple and Google. I just don't think that's cool. So, there's nothing wrong with buying Apple and Google when they get down to those bottoms. But like I said, if you've only got $1,000, even if the market crashes, you might get one share of Google if you've only got 1,000. So what's that gonna do? That just mess it up. Yeah, there we go. So, like, Google got up to 1,500. They buy that one share. Maybe 5-10 years from now it gets back up to $1,500, and they made $500 over 10 or 15 years, whereas they could have took that 1,000 and maybe bought 1,000 shares of Carnival when it's at $1 and make 15 to 20 grand in 10 to 15 years. So that's where I'm at with this. That's why I'm doing these lower price stocks. So yeah, that too. Yeah, for sure. Alpha, I agree with that. The problem is you can get rich quick schemes and stuff like that from the stock market. That's one of the things I'm trying to uh, bring people. I'm trying to get people to see as well. Like I want you guys to. Oh, all right. I got in. It's a pretty important call. So, guys, I will see you tomorrow morning. We'll be back for the day trading live streams. Of course, I'm mainly swing trading right now, and we'll see where the market's at in the morning. Thank you guys for joining me. If anybody's new in here and you haven't yet, please subscribe and hit that notification bell if you want more of these live streams and things like that. So yeah. All right, guys, have a great night, and I'll see you tomorrow, whoever's going to be joining me.